Arun Thukral, who's the MD and CEO of Axis Securities, joins in with his perspective on the markets. Arun, it's great to have you on the show. Thanks very much for taking out the time. What are you expecting from the upcoming budget?
So for budget now, it is going to be mostly an interim budget, and if you look at the agrarian stress, I think this is one of the area which government would like to focus after the recent defeat in the state elections. So maybe they would work on the input assistance to the farmers on the like what Telangana has done on Raite Bandhu, and maybe they may cover also the marginal or landless farmer also, so that may cover around 85% of the farmers. So that is one area where the focus will be. On the urban side also, after this EWS, there may be some raise in the exemption limit. Right now it's 2.5, it may go up to maybe 4 or 5, and similarly the ATCC also may go up. So these two things may happen, this being the election year, and there may be more focus or more allocation to schemes like Manrega, Ayushman Bharat or PM Awas Yojana. All this may happen. Even the divestment target may go up, and maybe government may look at the enemy properties, which we always discuss. So these are the few things which we expect in the coming interim budget.
Okay. What is it that you're expecting from the earnings so far? You know, IT is the only one where you can really perhaps draw a trend, and that too only large cap IT. And it's largely been an inline set, nothing alarming in the commentary. You know, they're all pretty confident about maintaining growth for 2019 as well. But do you believe that the best may be behind us when it comes to IT as a stock performance?
No, I think IT should continue to do well because of the rising spend of US companies. That may continue, and the digital piece is also doing well within the IT company. If you look at TCS, the kind of award wins they had, around $6 billion of deals, and maybe at the cost of margin the business is growing. Even the Infosys has given better guidance. So maybe that shows that yes, the IT is going to stay and going to do well for the immediate foreseeable futures. That is what we feel. And on the other earnings, recently we have seen the Z also has given, maybe the domestic ad revenue, if you see, has grown maybe more than 20%. So far the earning has been satisfactory, and now maybe today what we get from Reliance and HUL also seems to be in line. Maybe the Reliance may show good growth in the retail side, or maybe the Jio side, although the GRM may not do well. And HUL also, we are expecting that both the volume and value growth should be doing well. So as far as the earnings are there, I think these are the silver linings for the last 2-3 quarters, that at least earnings are increasing, and this can be the trend for the next rally over a period of time.
But what do you do with the policy sensitive? Because a lot of people will ask you that, you know, given the budget in mind, you would want to have a bit of a trading bounce in fertilizers, sugar. In fact, keeping the backdrop that this year you're also looking at the elections in May, you know, a lot of the policy sensitive sectors may be seen favorably over the course of the next 6 months. What's your view here?
So all these measures also maybe have some kind of a pressure on the fiscal side. Maybe the 3.5 may or may not be possible. So if that happens, then maybe the policy, the coming policy rate also will be affected. Maybe with what we are expecting, a rate cut, that may not happen. But the other side is that there will be more money in the hands of farmer, more money in the hands of middle class, and that is going to help again the consumer durable company. Maybe if the middle class gets some more money, maybe auto and auto ancillary may do even better. So these are the things we are expecting. And on the macro side also, the position looks very comfortable. The inflation is very low now, so that has given some kind of a comfort. So let us see how the government maintains the balance and what kind of allocation is done to all this rural side or the urban side. I think that is what we have to wait and watch.
Right. Arun, just an extension of the point that you were making, corporate banks really has been the darling story on D Street of late, with both Axis, ICICI Bank or even SBI for that matter holding up well. What is your own view on whether or not corporate banks as a story is a more longer term than the 3 to 4 month trade which has already played out?
So what we always talk about first is between the PSU bank and the private bank. So we obviously get into the private bank. So far we were only talking about with the private banks with retail focus, but last 3-4 months again we have seen that the NPA is going out of the books of these corporate banks, and they are doing better. I think in the foreseeable future they would continue to do better, because what we have not noticed that they have a very good retail book also, and at the same time they have a good CASA franchise. So I think, and recently that NBFC problem which we faced, which the economy faced. So I think in view of all that the private bank with corporate focus and the valuation also is much better. So I think they will continue to do well, and that is going to be the story for the next maybe 1 or 2 years minimum, and then also thereafter also I think they will continue because their retail book is also good.
Okay, what do you make of how you would position yourself in pharma selectively? Are you getting bullish there?
Yeah, pharma obviously, because if you look at two things. One is that FDA woes are not as big as it were earlier, and the second thing is that the pricing pressure, and whatever we hear, whatever we now listen to these people and talk to these people, we understand that the pricing pressures have which were there, it's now almost bottom out. So I think that is a great thing, and obviously the tailwind of the rupee depreciation has also helped, and they are getting into not only the generic product but then the complex products also. So maybe again for the next few months at least for the next 1 or 2 years, we think the pharma also can be a good bet after IT. So if we look at the pack after consumption and then IT, and then the pharma is the third in our list as far as the order is concerned.
Right. Arun, tactically, would you say that there is perhaps more merit in buying mid and small caps, because maybe that would recover more than large caps, considering all of 2018 you just wanted to be safe and stick by with the large caps as a theme?
So I think one has to go by the asset allocation, number one. That is what we have seen last year. Obviously the mid cap has fallen around 14% and small caps have fallen around 28%, and the previous year they went up by 45 and 65% like. So if you want to get into mid cap and where the quality is good, where the earnings are good, I think one should get into these stocks or sectors in these stocks in a staggered manner. And for the next 3 to 4 months, maybe the large cap allocation has to be there, and over a period of time, then as you said correctly, that tactically one should start getting into the good quality mid cap stocks and maybe a few small cap also.
Okay, Arun, good to have you on the show. Thanks much for taking the time out and speaking with us today.